Alright, so we've talked about the most popular indicator out there, which is the relative strength index. Now let's talk about the next most popular indicator out there. Let's talk about the MACD, which is on our charts set up this way. So we have to make sure we have the same settings, that way we follow each other along. The fast length at 12, the slow length at 26, the MACD length at 9, and the average type is Wilder's, which is just like the RSI. The colors don't matter. You can have them set up as different colors, whatever your preference is. But the MACD is down here displayed on the bottom, and you can see that the same settings here apply. Now the MACD has 3 different parts, and one part has 2 parts. So that's going to be the first part, which is going to be the middle is 0, everything above 0, and everything below 0. The second part is going to be those 2 lines which cross up and down, which is a signal in itself. And then the third part is going to be the histogram, which is going to be these green dashes and these red dashes that you see here. Everything does its own thing, but in combination of the 3, you are able to use the MACD in combination with the RSI and able for you to tell if a stock has upward momentum or downward momentum as it moves up or down. So, remember how the RSI tells you if a stock has upward momentum when it's above 70 or downward momentum below 30. The MACD kind of tells you the same thing. However, the MACD does it in a different way. When a stock is trading above the 0 line, it is a point in which a stock is leaning towards the bullish side. However, it is not enough that it's trading above 0. It also needs its histogram to show strong history. So the histogram are these green dashes. The higher they go and the brighter they are, the stronger that momentum is to that side. So you guys could see that as we were riding the bullish cycle in 2021, that histogram started weakening out and it started showing signs of weakness. And then we cross down and suddenly the histogram dips and we fall below 0 and we continue selling off. So during this bounce, for example, so when we have a bearish market, we are going to see bounces. But many people will wonder, is this a bounce or is this a reversal? The MACD and the RSI are able to tell you that in a perfect way, because when you're looking at a bounce, especially if you're looking at a very long time frame, and you see that the histogram is still deeply red, I mean it is way below 0, that means that this specific stock's upside move is nowhere near strong enough in order for it to be actually a reversal. And so when you see that stock moving up and the MACD is not even flinching, that means this bounce probably means nothing and the stock is likely to be rejected back down. Now let's talk about the MACD on a shorter term time frame, where we can see that the MACD here in this case crossed up. You can see that there was a nice cross up, started rising that wave up. And so there are 2 cross ups here that we have to talk about. We have a cross up that failed and we have a cross up that succeeded, which is why it's so important to remember that everything we're teaching you, you have to remember to place your stop losses at appropriate points. So just because there was a cross up, it doesn't mean that we are about to take off here in this case. It could just mean that this is a false signal that's going to be followed by a sell-off. So remember, the market doesn't always go your way. So it is your job in order for you to put everything together that you've learned and create proper setups around what you're seeing. So here in this case, we can see that there was this cross up that failed and it immediately crossed back down. So this is a sign in which you needed to get out of this stock and you would have been out. And so if you only use the MACD for your trading purposes, say you only use the MACD as an indicator, that means you will buy at the cross ups and you will sell at the cross downs. And so even if you sold here and you took a loss, if you just applied the same strategy once again on this cross up and you waited and waited and waited, you can see that you would have held the stock all the way up until this point in which it crosses back down, which will make back whatever you lost here in this case and then some. And so this is where applying your strategy over and over again makes sense. However, there are other indicators that will help you from making those setups that will potentially end up in a loss. So there were a lot of signs here that would have prevented you from getting into the stock at this specific point, and you probably would have avoided this trade altogether. But just goes to show that it's not always working. This is something that I have to teach you in this course, that it doesn't always go your way. Sometimes it goes against you, and that's where your job comes in of placing proper stop losses. So say, for example, you played the cross down on the MACD, so you're just using the cross ups and the cross downs, and you play the cross down, and now you see the histogram dipping back below zero. That means the stock has strong downward momentum. But then on this cross up right here, you can see that the MACD's 0 point starts going green. And so even though we're right here and we come back down, the MACD is still in green, which goes to show that this is not as strong as this move down here, and you can potentially see a move back up. Now let's talk about the MACD on an hourly time frame. So just a minute ago, or in the previous part of this chapter, we talked about the RSI, and we talked about how the RSI shows you negative divergences. Well, the MACD shows you the same thing, because there you have it, in which there's a stock that breaks out, but the MACD had already crossed down, and you can see that the histogram is way red here on the hourly time frame. So even as the stock is going up, you can see that the MACD is starting to fall down. So as it comes to break out, you can see that the RSI is below 70, which we've already covered, and you can see that the MACD is moving way into the red, and it's already crossed down, which is another fantastic signal that this move is probably going to be a fake out, and we can see a move back down. So here's an example where we break down how the MACD came into play for this specific stock. So you can see that on this move up, the stock had a nice cross up, the MACD crosses up, and the stock carries out an upward momentum. During this upward momentum, the MACD is moving stronger and stronger into the histogram. However, you can see that as the stock continues to move on up here, the MACD's histogram is starting to move into the red. So even when it moves up and breaks out here, the histogram is nowhere near what the histogram was here, which was lower than this point. So just like the RSI can show you a negative divergence, the RSI can show you the same thing when it comes to the momentum and on its histogram. So after the stock shows this weakness, you can see that the stock's MACD crosses down here, which was right at this point, and the stock continues selling off. It attempts a slight cross up, but you can see that it quickly crosses back down, and it moves further and further into the red on its histogram, and it continues moving below that 0 mark. So the three parts of the MACD, you had the cross down, you had the lines trading below 0, and you had the histogram in the red. So the three of those combined, you can tell that this stock was in a deep bearish momentum. So when the stock even goes to bounce, you can see that the MACD was not able to hold above that 0 mark for very long. That histogram is already moving back towards 0, and the lines are already starting to cross back down, and this is on the hourly chart, which means that there is a moment of indecision. So this is a very critical moment for this specific stock, because the stock is testing to break out of a critical resistance, and its MACD is right at 0 on almost all the three parts of the MACD. So it can either pick its fate to go up. So if this MACD manages to push into the green, the stock breaks out and the momentum is there, or the MACD crosses back down and it starts moving back towards that -5 and below mark, and the stock moves back down. Now notice the difference between these two stocks. You can see that Tesla here in this example for this stock is right at that 0 mark, and the MACD is really holding on. Or Apple in this case, which is in a different position, you can see that Apple is way above the 0 mark on the MACD. The histogram is slightly red, but it's still way above the 0 mark in terms of the lines. However, if you are looking at Apple, or you're considering a position in Apple, you have to also learn that the stock has a very long way down in terms of a support find. The stock's next strong support is at 144, and the next strong support below that is 136. So it can potentially have that cross down and have it pull all the way below 0. However, in terms of who's healthier right now, Tesla is going to be less healthy than Apple on the way up, because Apple's MACD is at least still trading way above 0 in terms of where the lines are. So keep that in mind when you are looking at positions. You have to also keep in mind where the lines are trading, because it's easier for Apple to have its MACD cross back up and continue holding these highs, whereas it's harder for Tesla to have to move the MACD to way above 0 because it's going to need a lot of volume and momentum in order for it to do so. Apple has already proven itself. It's easier for a stock to stay in that motion and then a stock to get into the motion without a significant catalyst that moves it up.